So what happens when markets are glued to Washington politics instead of charts? Well, we get days like today where a government shutdown headline can move the dollar faster than a hawkish Fed speech. Markets love stability, but right now they're acting like they've had 3 cups of coffee and no breakfast yet. So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning. I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief, where I unpack the biggest movers across currencies, commodities, and indices each morning, blending your fundamentals and your technicals, and well, just the right amount of common sense. Because let's face it, markets don't always make sense. Let's start off today with the dollar, because Washington is once again the main character of this financial drama. The dollar index steadied around 99.6 after a 3-session slide, thanks to signs that a potential deal to end the government shutdown is forming. Senate Majority Leader John Thune pointed towards a reopening through January, which eased some pressure on the greenback. But, and as I've said before, there's always a but. Consumer sentiment remains deeply negative. The University of Michigan index just fell to its lowest level in, well, nearly 3.5 years, weighed down by persistent inflation concerns and household financial stress. Markets are still split on whether the Fed will cut rates in December, with odds sitting around 67% with a quarter-point reduction. In other words, traders are still guessing. Looking at the USD CHF currency pair, the pair is trading around 0.806, slightly higher on cautious sentiment. But the technical picture is very interesting here. The pair is struggling to break above the 0.08 level, which is that near-term resistance. Momentum also looks fragile with the RSI flat near 50, MACD is leaning lower, and while the evening star pattern on the daily time frame suggests possible deeper corrections. Key levels to watch at the moment, well, bulls need a clean break above 0.808, which will then lead to a potential rally towards 0.8125 or even potential 0.817. Bears on the other side are watching those downside zones, which is sitting near 0.804, then 0.801, and finally 0.7925. This is likely to, well, remain headline sensitive. So if Washington sneezes, this pair might just catch a flu. Moving over to commodities, silver has been, well, the reliable plot twist character this week. It climbed back above $49, marking a 3-week high. Drivers, well, number one on the list, weaker US dollar, which equals cheaper metals for global buyers. Number 2, worsening US consumer sentiment, which we already have discussed. And then number 3, private job data showing the biggest October job loss in 22 years, driven by cost-cutting and AI automation. Yes, the robots are officially taking jobs now, but market sentiment is now improving slightly as the Senate moves closer to ending the shutdown. That could limit silver's upside in the short term. Some key observations to take note of: silver is up 1.35% from the previous session. Still up 60% year on year. Yes, I said 60% year on year, but has fallen 6% this month, reminding us that markets don't move in a straight line. Key levels to watch: if silver holds above $49, bulls will keep their tone intact. However, a break below $47.70 could open towards softer retracement. Upside potential may trigger if sentiment improves and the US dollar firms. This one remains a sentiment thermometer. Risk off equals silver strength. Finishing things off today with equities. Tech is having that moment where everyone's wondering, did we overdo the AI hype? And Wall Street responded last week by selling tech like it was on clearance. Nasdaq is currently sitting around 25,370 points, up 1% so far from Friday's session. It is still down 2.5% over the past 4 weeks, but still up 20% year on year because, well, the AI boom isn't gone, just catching a breath. Meanwhile, Nvidia is asking TSMC for more chips to meet demand, while traders are still debating whether valuations have gone too far. But there is a plot twist. Hopes of the government reopening have lifted futures, suggesting traders are cautiously stepping back in. This index is currently bouncing between optimism and fear like it's a tennis match. Political clarity plus Fed rate expectations will equal the next major directional cue. Key things to watch in the next 24 to 48 hours. Well, number one is whether Congress finalizes the shutdown deal. And number two is whether the US dollar picks a direction instead of hovering indecisively. Because once the dollar chooses a side, metals and tech will follow. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX and, well, go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.